Hi everyone, you're all very welcome to our weekly market preview here at the Alpha Capital Group. So I suppose obviously recapping on our weekend markets video over the weekend, obviously demonstrating the ultra strong close in the stock markets after, of course, the CPI figures that really did strengthen and aid the stock markets on Thursday into the weekly close on Friday. Of course, now let's have a look at the kind of key events this week in the financial markets, getting a clear insight as to what's kind of coming up, and of course being prepared as best as possible. So this week, compared to the last couple of weeks with all of the central bank meetings and economic data, is going to be a more kind of calmer week in the markets. So of course, last week we had the midterm elections, we had a couple of different central bank meetings. We did also have as I said, the CPI figures. Of course, the inflation data came out obviously lower than expected, which aided that stock market rally into the weekend. And then the week before, obviously, we had multiple central bank meetings before that. So I suppose this week on the docket, there's going to be a little bit less of an economic data. So it'll be seeing, can the price action continue in line with the price action we saw into last week's close? And of course, seeing, does these indices continue churning higher off the back of a higher risk narrative in the financial markets? All right. So first things first, really kind of looking at the calendar this week. So of course today we did have some speakers. We had the Gundos earlier this afternoon. We had Fed Brainerd. We had Jordan from the S&B on the wires as well. So giving them kind of their thoughts. Of course today President Xi and President Biden and the Chinese President Xi obviously meeting as well. So of course trying to trash out kind of the future relationship there is obviously going to be important. So obviously seeing how that kind of reaction this week as well will be quite interesting. Now tonight we do have the German President Nagel, Bundesbank President Nagel on the wires at 6 o'clock, and we do have some expiries tonight during the Asian session, or kind of the daily rollover into tonight's US session. So we've got euro positions, we've got the Aussie positions, we've pound, yen, and dollar positions all being reconciled into obviously tonight's close. Okay, so that's obviously going to be quite important. Now later on tonight we do have Japanese GDPI. So of course gross domestic product Q on Q is going to be the kind of the progressional aspect there on that, to see how is the Japanese economy starting to refer and reflect, given the higher than expected inflation narrative in the broader global environment. Now overnight tonight again we do have Chinese data out, like we had over the last couple of days or so, like particularly last week, tail end of last week, we had Chinese data on multiple evenings, and of course tonight we do have house price index, we do have some retail sales coming out of China as well. So it'll be interesting to see, now that they are trying to come out of the COVID environment or the COVID lockdown environment, how is that going to reflect into the data as well. So that's obviously going to be kind of an interesting element to take into consideration tonight during, obviously, as I said, the Asia session. So where does that then leave us for the markets? Well, that obviously leaves us still holding a lot of the bid that we saw from last week, as we kind of obviously look to reconcile the opening of the week this week. Now, of course, on Friday we did have that earlier close as well, off the back of the 11th of the 11th remembrance bank holiday, for obviously the celebration of World War II as well. So you do have to factor that into consideration. So really kind of just seeing how does the markets open up in the early parts of this week, to see is there any sort of sentiment coming off the back of that. Now tomorrow we do have a wide number of data. We do have average hourly earnings claims, or excluding bonuses. We've got claimants in the UK as well. We have a raft of data out both in Spain, Germany, France, and the broader Eurozone tomorrow. There's a lot of different figures coming out. CPI in Spain, whole price index is coming out in Germany, and CPI in France as well. So that'll be worth kind of keeping an eye on, because we know the CPI index year over year in France is currently at 7.1%, in Germany at 7.3%. And if you look at the wholesaler price index, you're currently sitting at around about 19 in Germany as well. So we obviously have to be reconciling of that as well. So tomorrow is going to be a little bit more reflective of the European state of affairs. Of course, we're going to have to keep an eye on the European GDP figures tomorrow, 10 o'clock. Growth. So, of course, from an economic perspective, from a stock market perspective, you generally want to have the growth as high as possible, because the stronger the economic growth, obviously, the better the economy is doing in the broader sense of that. So, of course, then that's obviously going to be a good thing for stock markets if the figures are higher. If we do see a lower than expected figure in the European GDP figures tomorrow, we should expect potential sell-offs coming in some of these stock markets as well. So very much worth keeping an eye on that. Now, as we progress tomorrow to the US session, we have PPIs. We have broad range of different PPIs, excluding food and energy, in the grander sense of it. So we're kind of just really kind of seeing what tomorrow brings in that regard. And obviously, given that the CPI came in less than expected, are we going to see a weaker PPI in line with that? And of course, tomorrow we do have the federal cook speaking. We do have Ellerson from the ECB. And of course, then tomorrow night we do have a lot of Japanese data as well. So Japanese GDP is coming out as well. So tomorrow, even though it's maybe not as high-flying data or not as glamorous as you might think, there is still quite a bit coming out tomorrow as well. And that's going to be something to keep an eye on compared to obviously previous weeks. So that's obviously something to kind of look at. Given as well that we do have obviously German economic sentiment in the ZEW as well coming out as well. So there's quite a bit to come out tomorrow, mostly in line with Europe. So if you're traditionally speaking or traditionally trading Asia pairs or US dollar pairs, obviously tomorrow you'd expect a little bit more volatility potentially in the Eurozone. So euro and pound pairs will be worth looking at. All right. Now, of course, this is just a quick reflection on the markets from last week. So not really too much has changed from our video from the weekend markets. We have seen that little bit of a recovery in the dollar from that 106.50 level. So just marginally underneath the 106.50 level down here at this daily liquidity zone at 106.35 is actually where we've actually closed off on Friday. We have seen a little bit of a bounce off it so far this week. So you are seeing a little bit of a tail off slightly in some of those FX pairs, and of course a little bit to a lesser degree in the indices as well. So we just have to be conscious of the dynamic at play here at the minute. So obviously stronger dollar means Euro USD, cable, USD yen. It'll obviously give some aggregated strength in the dollar short term, but of course, still very, very early days yet. That massive sell-off that we saw last week, we're waiting to see is there any sort of reaction from this 106.35 level. Now, of course, we did on Friday see a little bit of reaction, but of course, very, very early to tell to see whether that initial move will actually become more sustained, and that is obviously something to keep an eye out on this week. From a treasury perspective, we have seen the treasuries move, obviously very, very sharp sell-off Thursday and Friday. We did see that little bit of a bounce back, but we're now kind of retesting or challenging that 3.9 level today, which of course was rejected earlier today. So again, obviously short-term movements here, but obviously seeing does that become a little bit more sustained at this moment in time? The answer to that is no. So as we move then into the FX pairs, again, just trying to put as much clarity on the situation as possible. Last week, we talked about obviously this area here at 102, 103. We had that very, very strong movement into the close last week where we did come into this 103.50 level. So this area of interest here between, I suppose, 103 and 103.50 has been met. You can start to see the price action is consolidating between this level. So it'll be interesting to see, do we actually kick on through 103.50? Because if we do, that'll allow for an even deeper correction in terms of dollar weakness. It would more than likely lead to euro dollar continuing to push higher. And then you're really looking at kind of this 105.50, 106 level up here being a potential next deliberation zone. Now, of course, from my perspective, when you look at the price action over the last, let's say, 5-6 months, this 103.50 is going to be structurally a key level. And of course, if we can get a daily closure above it, that is going to continue to see movement in risk orientated assets. You're going to see that slightly weaker dollar continue to play out. And then, of course, seeing how that plays out into the middle and end of this week. Now, again, with the cable prices, so we have obviously seen a little bit of reaction in the cable prices here. If we go full screen for a second, you'll see how the cable has come back into this 118.50 level here. More prevalently speaking on the 4 hour, it's a bit more visible. You can kind of see it here if we go across a nice little short-term peak. We had that impulse from August. Then we had that flash crash into September. Markets still very, very much recovering. Now, if you look at the structural trend here in this price action, you can actually see very, very clearly that we have higher highs short term. If we let's say ignore the flash crash and the sell off just for a moment, you can see how we've got consistent higher highs, higher lows. So you can see higher highs, pull back, higher lows, higher highs, pull back, higher lows, and now we're seeing new higher highs. So you can kind of generally see that over the last, let's say, 3-4 weeks in particular, you can see how the assimilation is for kind of that correctional movement. So of course that's going to be worth seeing. Is there any sort of effect in that, or is there going to be a cyclical retrace against that much dollar weakness that we saw last week? And if we do see that retrace against the dollar weakness and we start to see that DXY picking up off that 106.50 level, then you're going to see that cable kind of pull back again. This higher high, higher low scenario is going to continue playing out in line with the order flow in terms of the liquidity, in terms of the market bias. So it's important to have clear structure around that. And of course, if you go to a 1 hour chart, you can see that very, very clearly, in fact, because this is actually where we closed on Friday. You can actually see it here. We gapped very, very clearly. If I zoom in for a moment, you can actually kind of see the rejection off the 118.50 level. We gapped down. We did come back up into this level here. You can kind of see just about how the gap actually closed. If you incorporate the wick, you can kind of see it there. Nice little gap close. And the markets has drifted off today, of course, because the DXY has bounced quite nicely off that 106.35 level. So that's going to be worth kind of keeping an eye this week short term to see if there's any sort of reaction off of that zone. And of course, then being able to follow through on that as well. So that's kind of where we are. Now, of course, when you look at the broader perspective, the higher highs, higher lows, would it be surprising to see the cable pull back, let's say 114s, 115s in line with the order flow in lines in terms of that broader trend, let's say over the last couple of weeks? Absolutely not, because we've seen it happen a couple of times before. So we do have to be nimble for corrective moves in favor of the dollar back into some of these levels here at 114, 115. And then you have to look at this liquidity level here, which is just underneath the 114 handle. And that is something I'm actually watching myself, personally speaking. So worth keeping an eye on that. Of course, if we go scan just through some of the pairs here very, very quickly, dollar yen, again, in line with that little bit of a corrective move off the DXY. Oh, let me just cancel that for a second. You can actually see that DXY bounce. Nice little move here off of 138.60 on dollar yen. And we're seeing a little bit of a corrective move after what's been obviously a very, very bearish week last week for dollar yen, which went from 146, even at highs of earlier in the week of 148, all the way back to 139. So that was a 700-800 point sell-off. Very, very deep correctional move. And now, of course, we're starting to see those corrective impulses now. From those very, very clear sell-offs to become a little bit more kind of lower low, lower high corrective movements that you tend to see at the medium end of these sharp sell-offs. So you tend to see that very, very sharp impulse firstly, and then you start to see the order flow, kind of the lower lows, lower highs. That's impulsing the price action now is becoming a little bit more in line with, I suppose, the back end phase of that trend cycle of price action. Now, again, moving across to dollar CAD, again, the weaker dollar CAD has allowed this to pull all the way back. So we talked about there even a couple of weeks ago, or even last week as well, early last week, the potential for a 132, 133 correctional pullback. And of course, that actually has played out. So once the price action got this 4 hour liquidity zone up here, you can actually kind of see it now. Although we didn't break the structure originally, we did come down to local area. We did flag back up to the order block, and we just kept following through on the broader, shorter term liquidity moves. We broke structure again. We did get a little bit of an impulse, and then the price action sold off very, very viciously on Thursday into this area here where we stand at 132.50. Now, again, the likelihood is that if the markets become a little bit more corrective, you could see a potential pullback in dollar CAD back into maybe 134.50, 135 as the price action creates this shorter term bearish order flow, bearish trending price action structure. And then, of course, from that perspective, it's a case of, well, what type of liquidity or order blocks do we tend to come to? Well, if you're looking at this impulse, you can see it sold off from just above 135. But even from a short term structural perspective, even if you're looking at any sort of position like that, it wouldn't be surprising to see a rejection maybe from, let's say, even underneath 135, below a kind of 134.70 to 135. So worth keeping an eye on that as well. That's something I'll be paying close attention to myself in the early parts of this week, just to see how does that dollar dynamic play off of, and then seeing is there any sort of reaction. Because of course, if the dollar fails again and the price action ticks lower, then you're going to see the dollar CAD sell continue to sell off. You're going to see cable rally back into 115, 118.50s, and then you're potentially going to see euro dollar try and break out through that range of 103.50s as well. Last but not least, in the FX pairs, we're seeing the Aussie continue to grind higher. So we talked about it this week. Really not much happening today in the Aussie. Has come back into this liquidity level at 67. I suppose now it's just a case of is there any sort of reaction around this zone? You can kind of see it now. We're coming into the order blocks, but does that necessarily mean that we're going to reject it? Not necessarily, because if the trend, if the dynamic, the sentiment continues, this becomes a decisional area, and the decision area can very easily be broken as the order flow continues to trend. So it's important to get that element. Although we did get the initial rejection on the 4 hour, we are coming back in, and this could be the grind higher to potentially break through. And of course, if we get that 4 hour close above, the likelihood is that price action is going to continue trending to the upside as well. So just be aware of that dynamic as well going on in the background. Gold prices, the order flow is still ticking up. So I suppose structurally speaking, If you're looking for our perspective, really at this moment in time, as I said in the weekend markets video on Friday, this kind of 1790 to 1810 video, and I'll just get the team to stick this a link to that video in the right hand top corner, but you'll see that we talked about this region here around 1790 to even 800 1800 with levels slightly above that at 1807. So I suppose from my perspective, the order flow is now becoming a little bit more flagging like, which generally means that you're going to start to get shorter impulses, shorter term, higher highs, higher lows. And of course, if you see that, we've got a little bit of an impulse, we've got that impulse again to create new short-term highs, pulls back into this region, and of course now the price action is trying to take that higher again. So rather than trying to predict selling opportunities here, you're probably better off waiting for that structural type of move end, and then look to see if there's any sort of reaction from the liquidity zone per se. And that's probably something that I would recommend myself, but of course making sure that it most importantly fits your trading plan, whether you're a short-term trader or you're a higher time trader or whatever the case may be. All right. Now, of course, to finish off, we are seeing indices continue to grind higher. So this was a short-term move I'm kind of looking at today. We are seeing that kind of steady grind higher. So the very, very sharp, aggressive move. Then we start to see the flagging structure. So that's the initial kind of phase, the very, very sharp turnaround in liquidity. And then you start to see the kind of higher highs, higher lows playing out off the levels. Now, personally speaking, I was looking to see, was there any sort of reaction here on the 60s, 39.60. But of course, as you can see, we held the 1 hour order block here at 70. We did get a little bit of a reaction from it, and price action is looking to now try and take this higher. So I suppose now it's a case of, can the markets keep churning higher, take out the short-term highs here at 4,000, and if it does, then the likelihood is it's going to continue churning higher back into the 50s and back into this daily order block as we talked about weekend markets video at 4065. Now, moving across the last few indices very, very clearly, similar dynamic across the board. So Nasdaq is continuing to turn higher, and I suppose structurally speaking, from an order flow perspective, a very, very aggressive move on Friday. We've taken out this liquidity now, which is obviously the key indication that we're kind of looking for. We did get a little bit of a pullback in pre-markets this morning, and of course, price action is holding this 11,700 level. So this liquidity area around 11.7 has held very, very nicely today. It's acted as a nice little cushion of support for the markets, and we can actually see how since then the markets are trying to take this higher. So we're starting to see that flagging structure playing out, the higher highs, higher lows, and we are seeing a nice little reaction off the level as well. So worth keeping an eye on that into the middle part of this week. Now, again, structurally speaking, similar scenario with the Dow Jones. The Dow Jones is trying to break through this 33,850 level. And of course, from that perspective, if you look at the broader narrative, it's a case of, is there any sort of reaction from this 33,850 level, which we saw way back in August. So you're talking now September, October, over 3 months ago now, or approaching the 3-month mark from this reaction. And we're almost back in the same level, testing the same zone of interest again, our point of interest. So worked to see if there's any sort of reaction from here. We did get the rejection on Friday, but we're now trying to take it out today. And of course, when you look at the 1 hour chart, you can see how the order flow is playing out. Very, very aggressive move, pullback, and now price action trying to take out this high here at around about 950 to 960. So we're keeping an eye on that. And then, of course, last but not least, FTSE. So this was obviously something I did look at in terms of that daily structural move to the 88.6 daily time frame. So you can kind of see that there. Daily order block rejection. Price action did reject it on Friday. We have seen a gap higher or gap lower, but obviously a move higher today. But again, has rejected that 409 daily level. So that's going to be worth keeping an eye out to see if there's any sort of reaction on it. And of course, structurally speaking, we have the higher highs, higher lows, higher highs, higher lows, new higher highs again. We gapped down, we've come all the way back up to retest. And again, that's off the sharp initial move. So if you kind of see in here, we talked about on Friday, the flagging structure, very, very sharp sell-off into Friday morning. We kind of talked about the idea that this would make one last impulse and back into this liquidity level around 400. Of course, where did we reject today? 409, and the markets has come back a little bit from that. So I suppose from that perspective now, higher time frame approach, is there a reaction from this level? And of course, that'll be worth paying close attention to tomorrow, given the data on Tuesday. And of course, given the data as well, which we'll be going through on Wednesday as well. So if you look at Wednesday's economic calendar, Wednesday morning, early on, we do have other European data as well, UK-based data, because we have CPI figures in Germany, or in the UK, should I say. We also have PPI, core output, and retail sales figures. So there's a lot of figures coming out on Wednesday morning as well from a UK-based economy. So if we're seeing retail sales lower and we're seeing CPIs and core output higher than expected in the UK, that is going to allow the FTSE to slide. So just be aware of that dynamic as well, potentially going to slide. So we're keeping an eye on that as well. And then obviously that leads us down with the DAX, which today is just continued to grind higher in line with what we talked about on Friday. Still seeing that short-term order flow to the upside. And of course, interesting to see, does it get to 14,500 area? Of course, today we did wake up to 14,440, but we have come back into this range. So we might just continue kind of flagging higher into the mid part of tomorrow. But of course, again, if the European data tomorrow disappoints, you could see these indices slide. And given how well the DAX has rallied over the last week or so, wouldn't be surprising if we saw a move into this order block liquidity area for the price action to sell off. So just be aware of the dynamics at play. It's all well and good looking at the news and the sentiment, but can you factor in the price action? Can you look at some liquidity order block areas of interest to determine where the liquidity has been driven from? And that's also something to kind of focus on this week as well. All right, so guys, I hope this video is useful and helpful. If you have any questions, as always, feel free to reach out to us. Feel free to subscribe as well to get the latest information. And of course, we have a continuous flow of information in our Discord community chat as well for those who are looking to join an active trading community as well. So have a great week, everyone. Trade safe as always. And of course, we'll see you all next time.